Hear ye, hear ye. It is our honor to welcome you to the Kingmaker Podcast.
Welcome back to the Kingmaker Podcast. It has been way too long. Alejandro, how are you doing, my friend?
Good. This past 2 weeks feel like forever. I look at the price and it just gets worse.
That's why I don't look. Just be busy with other stuff and you don't have to worry about it.
I want to welcome Umami Finance. This is DeFiAlpha. He's going to be with us today.
Hey guys, I'm really happy to be here. Thanks for having me.
And we were chatting a little bit beforehand and learning a little bit before you enlighten everyone. But, history was there, Ohm Fork. Now you're trading above backing. One of the very few Ohm Forks to turn it around and have a true sustainable model. So without further ado, what is going on with Umami and where are you headed?
Sure. Well, I mean, maybe the first thing that I'll say is that we are no longer an Ohm Fork. So part of the reason that we've kind of broken out of the trading pattern of that whole sort of subset of DeFi projects is that we have completely revamped our model, and now we are generating fee revenue from original vaults that we're launching on Arbitrum network, and that narrative of Umami now being this very focused play on a variety of strategy vaults located on Arbitrum network has really gotten traction, and so we're seeing ourselves being kind of pretty drastically repriced. I mean, even through this pretty choppy market over the past several months, we've gone from 7.5, as low as $7 per Umami token to a high of above 25. So we're up about 4x, and a lot of that is sort of a mixture of two key features of our project. And first is sort of something that we're offering holders right now, which is that one of the ways that we broke away from the Ohm Fork model is we not only completely stopped all token emissions. We set a max supply at 1 million Umami, and the vast majority of that is already out there in circulating supply. So we have this very disciplined tokenomics model, but also Umami holders can stake the token for a cut of protocol revenue in ETH. So there's ETH passive income, and that's the APRs varied largely based on the price of Umami, but it's been pretty consistently double digits, at some points as high as 50%. So that has been something that's really attracted people, and now we're getting very, very close to launching our first vault. It's going to be, as I said earlier, located on Arbitrum, built on top of two really incredible Arbitrum projects, GMX, the trading platform. A lot of folks might be familiar with them, and a really cool project called Tracer DAO. And the vault is delta neutral, deposit USDC, get 20% plus APR in USDC. And I think
that
the market
sounds familiar. Be careful.
Yeah. Oh yeah, do tell.
Wasn't there
what
a little 20% thing on the Luna network?
Just a little. Wiped up
No.
billions of dollars.
No, yeah.
We're not minting stable coins backed by Ponzunomics.
Oh, good,
So
excellent.
that probably helps a little bit. This is this, and actually that's a really good point. I think that one of the things that's kind of motivated us, and that I think is sort of emerging as a pretty big theme in DeFi, and I'm curious to get your guys' thoughts on it, is just this complete burnout with anything that feels even remotely Ponzu, right? And I think that there's an interest now in fine, don't give me 1,000,000% APY, right? Give me lower yields if need be, but let them be sort of sustainable yields based on protocol revenue. And that's what the vault is built around. That's kind of what we're very keen to scope out and build more products around in the future. But I would imagine that's the theme you guys are probably seeing.
Yeah, I totally agree, because You know, the big APYs and you know, all the fun we had before really was based on hopes and dreams. And you know, we've talked with some others about that in other podcasts. And at this point, we need things to be sustainable. We need to have actual revenues. We need to have sources that you can trace and see where it's coming from. So I applaud your efforts. But
I think it's long overdue.
yeah, it is long
personally.
overdue. Yeah, absolutely. So take us back. Why Arbitrum? Before we go deep into GMX and some of the other things you're doing there.
Yeah, I mean, a couple of reasons. So first of all, you know, we were historically always an Arbitrum-based project. We were when we were an Ohm fork, we were sort of the only real project of that sort on the Arbitrum network. So since our roots were here, it was always kind of a question of how do we build on that. And what has turned out to be the case, and I think what really excites everyone in our community about Umami is that we're very much of the view that Arbitrum is probably the most exciting chain, whether L2 or Alt L1, to be on right now. And we can kind of get into more depth around that, but I think the main points are that obviously there's this L1 to L2 TVL migration theme is still very much kind of, we're seeing it play out. I think we're going to continue to see it play out kind of more dramatically. There's hundreds of billions of TVL, as you know, on mainnet, but I think irrespective of what happens with the merge for Ethereum, we're going to continue to see a migration to L2s like Arbitrum that are way faster, far lower gas fees, and more secure, or as secure as mainnet, I should say. And I think we saw this. You can look at every chart for the well-known Alt L1s, right? And they all had their pretty dramatic run-ups, and then they peaked and they're back down, largely to where they were trading maybe first half of 2021 in a lot of cases. And I think that the market is becoming a little bit more skeptical, and users are becoming more skeptical of Alt L1s because they just don't have the scale or the network effect that mainnet has. They don't have the security or the decentralization. So, we think that being on, the fastest, one of the lowest gas fee L2s and the most secure of there's sort of a true L2 scaling chain is a really exciting place to be, particularly in DeFi. So that's what excites us about Arbitrum.
And the other question I'd like to ask or understand more is, you mentioned your tokenomics. Can you give us a little bit more insight to that? How's distribution look? VC's involvement? Couple whales hold everything. Give us a little bit more. Give us behind the scenes on that.
Yeah, I'll give you the behind the scenes. Sure, it's we're pretty pleased with our tokenomics and our distribution. So we've never involved the VC in any way. Largest whales would be maybe less than 5%, 3 to 4% of total supply. We have a max supply of 1 million Umami tokens. More than half of those are actively in circulation. About between 15 and 20%. I guess right now around 15% are in 12-month vesting contracts for the team. We're gonna do very small, very disciplined capital raises here and there. Because although we've completely abandoned the Ohm fork model, we do think there's a lot of strategic value in having protocol-owned liquidity and having real assets in your treasury, not just your native token. So we have about 200,000 Umami still on our balance sheet, that we could use to raise capital, and the rest is in our LP. We've had enormous demand for from large buyers wanting to buy into our tokens, so we've put about 3 million in liquidity into our Uniswap V3 LP. So we have a lot of Umami in that. So that's basically the breakdown. And as I said, really just not highly concentrated at all, in part because we never had VCs and we just don't have any really oversized whale investors.
So Uniswap V3 versus Curve. Go for it.
I was going to say
yes. What do you think, Alejandro?
I was going to say, when Curve? Like, why did he choose that over Curve? He could Curve V2 factory pool. I don't think it's out. It's going to be out soon, though, I think.
Yeah, I mean, first, I'll give you the main reason is because for projects that are sort of at our, at the market cap that we were at the time that we were sort of, pivoting to this new model. I mean, when we started, we were a 6 million market cap project, right? Now we're closer to 25 million. But when you're talking about, that inherently very low float, the question is, how do you get as little slippage as possible for people trying to buy into your token when you really can't provide that much liquidity? And so, for that, we have a really great fellow on our team, Stephen T, who specializes in Uni V3 active management. So he has pretty much, built and actively managed our LP on Uniswap V3 with really concentrated liquidity ranges, adjusting it as needed, and that's allowed us to have, way lower slippage. As we've grown, our LP starts to look a little bit more like sort of a Sushi or Uniswap V2 style LP, because we're now just accommodating really large block trades at a lot of different price ranges. But in the beginning, there was just a huge strategic advantage in using V3.
Alejandro, your rebuttal.
Yeah. Me too. I don't know. I think it could do like. Of course, you said you have your reasons, but I do think if at some point you are right that, of course, everyone had to start somewhere, but in the future, if you go to Curve, I think it could serve you a lot of benefits.
Well, I'll actually flag one thing, and this might also end up pivoting us into another relevant topic for Umami, but on Arbitrum, GMX. Everyone thinks of it as primarily a leveraged perp trading platform, but it also has spot trades, and it has deeper liquidity for at least core assets like, ETH, BTC, and a variety of stables than Curve does. And a lot of, more and more trades we're seeing, through DEX aggregators are being routed through GMX. So if we were to, if our goal was just to have very deep liquidity on, a different AMM, we would actually probably go with them since we're on Arbitrum. But I'm just kind of, there's a lot to talk about there.
That actually makes sense since you're partnered with them or like you're working with them.
Right.
So it makes sense why you go with them.
Yeah.
And it seems a lot of people in the Curve and Convex ecosystems are big in GMX also, correct, Alejandro?
Oh, yeah, 100%. One of the biggest advocates of... Well, the main reason why I've heard of Umami was Crypto Condom, and he did tell me that he is big in Umami, Tracer DAO now, and GMX, and he's basically converted the rest of the Curve and Convex ecosystem / team slowly but surely to be like excited for the projects. So it's really good that you have like all these big whales and influencers like supporting you, but like genuinely, not like trying to shell a token just to make money, but they actually believe in your project, which actually
we're really lucky in that respect. And yeah, I mean, not to shill too much, but I actually do recommend that you guys or listeners check out our Discord, because we just have some really incredible people. It is genuinely a fun place to be, because you do feel like you're kind of on the edge of a lot of discussions, with some really well-known whales. So you mentioned Crypto Condom. He's with us, pretty much every day, and he's been a really good advisor for the team and for myself. And just the other day, OX Sammy from Redacted was hanging out with us, and we had a pretty, interesting debate with Crypto Condom. And, I won't, name too many names, but I assure you that, a lot of the folks that, you might be following on Twitter, sort of the major whale influencers, are, either talking with us, interested in Umami, actively aping in, or, hanging out in the Discord. So it's been a really neat experience, and that's been a recent development for us, maybe the past month.
You can say Tetranode.
I won't say anything.
But yeah, one thing I want to learn more is, so you probably gone a lot about the Delta Neutral projects, but I've been really curious how. Well, first, if you guys were such a small cap project, like how easy were you to get those partnerships with TracerDAO and GMX? Just because they're pretty big protocols, they blew up like massively Was it really easy to get that partnership with them, or
Um,
especially
It's
since you
interesting
said it
way to
yourself?
I would say that it was hard to actually build an excellent, delta neutral vault on top of their protocols, right? I mean, these guys are pro Arbitrum ecosystem. They're native to this chain, so they were happy to chat with us in the early days and to support, a new project. And I think, we told them we have this really ambitious vision, and in both cases, I think they were, their response was, sure, we'd love to see it, right? And they were happy to support us and, answer any questions we had, whitelist us as needed for things. But, the real challenge was, just building the product. So in this case, we weren't really asking, I guess my point is that we weren't necessarily asking a lot from them. It's not like we were asking them to, provide emissions or something to incentivize us. They were just very collaborative in supporting us as we, put the vault strategy together and started building it.
One thing, I know you guys had Delta Neutral as the first vault, but I don't know if you talked a lot about the vaults after that, because I've heard that you guys are gonna have an ETH Maxi vault.
Yeah. Good
I know you
question.
guys.
Good
Yeah.
question. I think that is I'm glad you asked. We have not, been as forthright about or outspoken about some of the vaults to come after the Delta Neutral. So I think I'll drop a little bit of alpha on this.
It is your name. You have to drop alpha.
Exactly, it's obligatory, and that does come up sometimes, so I have to live up to it. But yeah, so look, we don't want to. We kind of made the mistake with this Delta Neutral vault of being really detailed with our information that we shared about the strategy itself. Luckily, no one was able to beat us to it because it is very complex, but we don't want to set ourselves up for that in the future. So I'll just share kind of on a very high level, though, what we are aiming for. So basically, here's kind of the philosophy, and it goes back to what we were talking about earlier. People are very burned out on Ponzonomics. They are interested in, what you could call real yield derived from, protocol revenues denominated in something like ETH or a stable coin, and some sort of sustainable and growing revenue stream, denominated in core assets like that. And those opportunities for to find that kind of revenue, they exist on Arbitrum. They obviously exist elsewhere too. We're Arbitrum focused. But the problem is that for the average investor, let alone for sort of institutional capital that's just coming into the space, wants that exposure, but is maybe not comfortable or familiar with more degen plays. It's really difficult to get that kind of protocol revenue exposure in a way that allows you to kind of know what your risk reward profile is, know what your exposure to the extreme volatility in the crypto market is. And oftentimes the types of assets you end up holding, for a lot of people feel a little bit strange. They're unfamiliar, and it's not even a criticism, right? But it speaks to sort of if you want to reach a larger market, you have to address some of this. So just to give an example, as we've talked about, GMX is a really incredible project, and they have sustainable protocol revenues from their exchange, a lot of potential for growth, and you can get exposure to that through their native tokens, staking that, or through GLP, right, which is a claim on their liquidity pool that backs their exchange. But GLP is like this interesting index-like asset. It's like 50% ETH and BTC and a couple other tokens, and then a basket of stables. And so these are what I'm sort of trying to convey here is that what Umami is doing is coming in and building these vault strategies on top of these revenue sources that create much, much more straightforward plays, but that tap into these sources of revenue. So, the USDC vault is the one we're putting out first, as I said, which is, just deposit USDC, get exposure to the yield from GLP, but have all the market delta hedged out completely. Now, some other vaults that we might do very soon after, just as examples, might be an ETH vault where you put in ETH. You have full exposure to the upside of ETH, and you collect yield denominated in ETH, again, from those revenue streams. And in a sense, that's an even more it's an even better strategy because a lot of these, on-chain revenue streams are denominated in ETH, so we're not even swapping it to USDC. We could do the same thing with Bitcoin.
Real quick on the ETH, what type of yield would you be looking at in a strategy like that?
We would be looking at, at least solid double-digit yield. I would say 15% as a floor. And so again, that would be a vault that is single-sided ETH deposits where you retain, you full exposure to ETH as, presumably its price should rise from where it's at now. And, collect, when you withdraw, you're collecting all the yield in ETH, but it would be 15% plus, for example. So
okay.
There's a pretty big market for that. Right?
Absolutely. And I cut you off. You're about to say Bitcoin, but
Bitcoin
what type
well,
of
right?
yield would we be looking at with that?
The same.
Excellent. So that's a far better product than, I won't name names, but a lot of other things that are available out there.
That's our hope, right? And so, then where we will go with that is, if you kind of want to picture the strategy on a high level. So we've got these different vaults and they tap into these different sources of sustainable protocol revenue, right? And they allow you as the depositor to, not have to build a complicated strategy yourself. Instead, single-sided deposit of ETH, BTC, or USDC, right? And collect back, mark pretty competitive yields, 15% plus on ETH, maybe 20% plus on USDC. And, we're going to build a variety of those. We're going to probably build, on top of those, what we are going to call meta vaults. So, just kind of cluster all of our ETH vaults, all of our USDC vaults into one single place for people to deposit. And we think that, at that point, we'll be able to absorb enough TVL, and of course, all of these will be, audited and insured. We'll be able to absorb enough TVL to really aggressively court institutional capital. And, I think that's going to be the big TVL inflection point in our view for, crypto in general, certainly L2s like Arbitrum. And, we think that having these very simple, very clear value proposition, very clear, forms of asset exposure in these vault strategies that we're going to build to absorb a great deal of TVL. We think that's going to be a real selling point for institutions. So that's what we're really excited about over the next 6 months.
Yeah. So you said audited and insured.
Mm-hmm.
Break that down a little bit more.
Well, audited will be Zokyo. They're finishing up their audit for our existing products, and we'll maintain a relationship with them. We've also spoken with Trail of Bits and might do a later follow-up audit with them. But our goal is to have every new product audited prior to launch, and we have the relationships with auditors to do that. And then for in terms of insurance, if I'm being honest, that's a little bit tricky because you don't necessarily have, if you're talking about the levels of TVL that we are. You can't necessarily have insurance for all the TVL in the vault, but we are talking to some pretty big names in Insurace, Risk Harbor. We've looked into Cozy, and at the very least, we will make insurance available as an option to individual depositors.
So I'm really interested in that. What percentage of a fee from your yield would you give up to have the insurance? Do you know yet?
We don't know yet. Usually they want to, these guys want to see the vault launch before they finalize kind of an agreement with us. So, they'll be audited at the time of launch, and then we'll have insurance in within, a couple weeks of that. And I'll be able to give a little bit more guidance on exactly what that'll look like.
Yeah, I definitely think that's going to be interesting.
Yeah, that's very interesting.
Yeah, after UST, for like a little bit, there was a lot of interest in insurance on stable coins, but everyone's going to be more careful from now on when it comes to new projects that they put their money into. So you're definitely going to... Wait, the fee's going to go to you or for the insurance company?
That would be for the insurance provider. Yeah, that would be for the protocol providing insurance. So that's one of the reasons I don't know. It's like they'll have their own fee structure.
One thing I've been meaning to ask, sorry, Keith, is so with the news, the Delta Neutral vaults, and after this comes out, I will hope this catch some eyes. Have you have you got any like messages from DAOs and everything?
Mm-hmm.
Just like interested because I could for sure, if you release the BTC Maxi, I could for sure see Citadel DAO, for example, like reaching out and I don't know, like working with you guys.
Yeah.
In case you don't know, Citadel DAO is a BTC, or in the audience, they're a BTC. Um, I don't know if it's like it's a deviation of the Ohm fork, an experiment to be a BTC Maxi built on top of Badger.
Yeah, we actually have had some smaller DAOs publicly announce that they've already started investing in Umami itself as as a major asset for their protocol treasury. So that was interesting. I don't want to divulge private conversations that we're having right now, but a number of very well-known DAOs on Arbitrum definitely want to use our USDC vault, and off of Arbitrum as well. So from some other chains are thinking about it too. And then the other thing I'll add is that we have gotten some pretty cool inbounds from institutional capital already. So yeah, I mean, I think that's been an affirmation for us that kind of that there is a good product market fit here for these vaults.
And when you think about it, in a down market, when people are fearful, that's when you buy. So institutions would be crazy to not invest right now with the potential that the future holds.
That's the hope, and that's kind of why we want to have kind of both the USDC vault and the ETH and Bitcoin vaults out very soon. And again, they actually use similar underlying strategies, so they can very quickly follow each other. But the thought is that though people who are a little bit more risk off, they probably do want to increase stable allocations right now because the market could fall further. So that option's available, but it would also be sort of, as you said, a big mistake to not use this also as an opportunity to accumulate. And if we have both vaults, we can kind of let people choose their own level of market exposure based on their risk preferences and kind of toggle between them.
Listen, when the market goes down lower after they bought in, just tell them they have the same market share. That's the truth. They have the same market share. Mm-hmm. Right, Alejandro?
That's something we try to bring into existence to cope, at least in the CVX Discord.
That's true, yeah.
All right, so Alejandro, do you have any last questions?
One thing I wanted to ask, what if it for your project at least? I don't know if you think really long term or short term, but me as a long term thinker, I'm curious about what are you excited about the project, because you've probably been talking to death about delta neutral, and I don't know too much on the ETH and BTC vaults, but what are you excited for, like for building or for your team over in Umami?
That's a great question. I'm glad you asked. I feel like my job in particular is to spend a lot of time thinking long term. We have some really brilliant people like Prepop, who's our effectively our CTO, who's kind of in the trenches, really working to ship the products. I'll share a few things. I mean, I think a couple themes we're very interested in long term. I do think we are going to see, both as a result of the merge for ETH 2.0, and then just kind of this continuing trend of capital migrating to L2s and sort of more direct to L2 fiat crypto on-ramping. I think we're going to see an explosion of TVL on Arbitrum. I think that if you are on that network and working in it day in and day out, like our team is, you can really feel that the pieces are in place because there's all these really incredible new DeFi protocols that are native to the network doing really innovative things. Tracer, GMX, StopX, Jones. There's a really long and growing list, and there's a lot of energy there. So I think we're going to see that ecosystem blow up in a good sense, and I'm really excited to be a part of that. I think, as I alluded to earlier, we're ETH maxis at Umami, and we're expecting to see, kind of on a very macro level, a significant shift of institutional capital from off-chain, largely USD denominated assets to on-chain assets, some stables, but also seeking a lot of exposure to ETH and BTC. And when that wave comes, right, and if you're a believer in sort of L2s like Arbitrum being kind of the natural host of a lot of transaction throughput, it's going to be incredible. And we want to build the big fat pipeline between off-chain TradFi institutional capital and Arbitrum. There's probably other chains too at some point in the future. So we're really excited about that. And then the other thing that I'll add, this has gotten some attention, but maybe not as much as it should have. We have a pretty interesting structure. We are a DAO. Our DAO also has an off-chain kind of legal entity that represents it called Umami DAO Foundation in the Caymans. And we have a supporting kind of tech company based in the US called Umami Labs that actually employs most of our team. And so, I think that what certainly excites me personally, just kind of given my role at Umami, is this idea that we're kind of on the cutting edge of building, something that will replace, corporate structures as we know them today, right? And it's not going to be entirely on chain. It's going to be a hybrid of some sort. And we think that the way that we've sort of, structured things at Umami is, anticipates the direction that things are going to go. But I'm actually excited to see kind of how regulation in the U.S. and in other major economies shapes up. And, I think that we feel well positioned for that because of sort of what we're building now. But it'll be really interesting to see that narrative continue to play out. And so that's another thing that excites me.
It seems like you all have set yourself up for the future much better than a lot of other protocols. Like, you will be regulation resistant, or at least flexible for the future. So kudos. Well done on getting that set up. So let me play off this question. We like to ask everybody this. It's now 2025. Your roadmap has gone perfect. What does 2025 look like to Umami?
Okay. So at this point, it's 2025, and let's imagine the global macro environment has been shaken up quite a bit. As I personally think it will be. I think a lot of us, a lot of people in DeFi do. And so, as a result, institutional capital has become really interested, in pivoting out of, U.S. treasuries and, traditionally, quote unquote, safe dollar-denominated holdings into on-chain assets. And, ETH is trading far higher than it is right now. And there's really been kind of a shift in, kind of the balance of power in the global financial system towards blockchain, with a lot more transactions happening there. And Umami, because of the fact that we're sort of, from the perspective of 2025, we're early, right? And we've built, a legal entity that has kind of navigated the regulatory environment and some of the challenges that that's thrown our way. And, we now have this entity that's, very well positioned to offboard institutional capital at a large scale. On chain, we've helped actively build out the Arbitrum ecosystem, and as interoperability improved, really just kind of blockchain's DeFi ecosystem as a whole. And as a result, we've got these huge, really sustainable and kind of proprietary, or at least kind of strong moat sources of ETH and ETH revenue, and maybe some stable revenue as well. And so we've, basically the core of our strategy, that I just described earlier, of, providing, the very high yield in ETH, in BTC, and in stables is still central to what we do, but we're now handling, billions in TVL from asset managers all over the world and operating a far more robust DeFi ecosystem. I mean, that's the vision, at least, that excites me.
You've done well for yourself, McLaren or Lambo at that point.
Yeah, I guess things work out okay for me too in that story.
Awesome. Alejandro, you have any final questions or statements?
No, honestly, I just can't wait to see how everything will unfold with Arbitrum. I'm not too worried about the macro or price. We make jokes about it, but I'm more than anything just excited to see what happens with GMX, Umami, Tracer. I'm not builder, at least not part of your team. So I just can't wait to see how history unfolds.
Yeah, and it sounds like you've already spoken to some other Arbitrum projects, but definitely recommend GMX and Tracer. I know you spoke to DopX, but it's an ecosystem to watch. So we're more than happy to stay in touch with you guys. But yeah, I think it's going to be a really fun place to be in the coming months.
Please do. And to close us out, shill anything you want to shill.
Um, okay, so our vault is gonna launch as soon as the end of next week. Certainly by the end of this month, the USDC vault. It is going to have a TVL cap, and it might sound high, 50 to $100 million, but there's a lot of interest from protocol treasuries, institutional capital. So if you're interested, we're talking 20% plus yield on USDC from sort of very sustainable sources, and the yield itself is in USDC. I'd recommend you just kind of follow our Twitter, hop into our Discord, and wait for updates. And the Umami token itself is. I will also shill if you believe in any or all of kind of the major aspects of the vision that we just kind of sketched out today. The Umami token basically is a very concrete claim on the upside from this ecosystem that we're building. It pays ETH, ETH yield taken from our protocol revenue from all the things that we're building on Arbitrum. So definitely recommend that folks check that out as well.
Well, DeFiAlpha, really appreciate your time today. Excited to see where this goes. I guess one final question. Anything you want to say to the convex and curve ecosystem folks?
Yeah, I mean, we're not. I guess I wouldn't say that I personally have a strong view on that in general. We're very friendly with the Redacted Cartel. I would say that, come on over to Arbitrum is what I would say, because, first of all, I would say watch GMX very closely because they're a very real competitor for Curve on Arbitrum. But that being said, I do think that there's going to be, a lot more TVL on that network, and, possibly a pretty steep competition for liquidity, and a willingness to, accumulate governance tokens, try to direct incentives. So if you're involved in that world, I think that you should look closely at what's going on over here.
Awesome. Well, appreciate your time. Thank you for enlightening us, and have a great rest of your day.
Thank you, guys. Same for you.
Kingmaker Podcast.